In 2026, I would say most likely it will still remain elevated, but improving on a sequential basis.
Maybe the margin level is, going to increase now.
Yes, exactly.
But probably not yet back to where it was before.
Hi everyone, I'm April Tan and welcome back to another episode of Intelligent Investing Market Talk series. Today we're diving into one of the most widely held sectors in the Philippine stock market, the telecommunications sector. Telcos continued to deliver lackluster earnings as they suffered from weak mobile revenues, single-digit broadband revenue growth, intense competition, and rising financing costs. But the bigger question is this: can telcos stage an earnings rebound in 2026? After all, this will be crucial in ensuring the sustainability of their future dividend payouts, which is one of the main reasons why investors buy telco stocks. To help us unpack all of this, we have COL Financial Telco Analyst Paolo Manansala, who will discuss what drove the telco's latest earnings performance, what to watch out for, and where the opportunities may be for investors in the coming year.
Thank you, Paolo, for joining us in the show.
Thank you for having me, Miss April.
Okay, so to start, can you summarize the key reasons why the core profits in Globe and PLDT fell during the first 9 months, and why the profits of Converge increased by only 1.2%?
Okay, so during the quarter, I would say the earnings of the three telcos remained relatively the same from the previous quarters. I mean, the only difference is Converge. So if we start off from Globe and Tel, for Globe and Tel, it's the same reason. So they had weak mobile revenues, and also they had also weakness in its broadband segment. So on a consolidated basis, its service revenues actually in general remain hindered. On top of this, they also experienced higher financing costs, which further didn't help their case, and which led to the decline in their earnings, right? I guess the more surprising is probably Converge, because we're used to seeing while Globe and Tel experiencing their declines and own struggles, Converge, she's the one who's like standing out and delivering growth in a relatively mature industry. But for this quarter, it only posted like you mentioned, 1% growth. This was primarily due to the manpower shortage, the cost on the cost side. But it also is related to why the revenues themselves are also remain hindered. Converge noted, I don't know if you can recall from the previous quarter as well, that the calamities and the different natural disasters actually led to an increase of demand for servicing, which Converge needed to ramp up their manpower to install, repair, and overall service these people. So
and they don't have the manpower, which also explains why the cost went up.
And it also explains why the churn also went up, because due to the shortage, their service times increased, and so a lot of the customers really churned out or chose a different. But that's it for today.
So you mentioned Globe and PLDT delivering flattish revenues. What's the reason for this? Is it poor economic conditions, or I guess more intensifying competition?
I would say the decline was primarily due to its mobile segment. Looking at the industry's mobile segment, or for Globe and Tel's at least, it's remained relatively flat. So the mobile industry landscape is still pretty much matured, right? So little growth. And on top of this, its ARPUs remain to decline in a year-on-year basis. And it seems like even their subscriber growth
very slow
as well. We also note that the competition could also come from Dito. As I mentioned, there's still that strain in consumer spending. So those lower priced offerings of Dito with longer validity periods seemed more appealing. But even them, they're experiencing some slowdown as well.
So I remember reading your report, and you said that Dito grew by only 10%, which is the slowest I've seen. I'm just curious about your thoughts on dito because it was a threat this year. But next year, do you think they will still be a threat, or are they also encountering challenges?
Okay. I guess on the revenue side, I would still say that they would continue to still have their own market share, maintain their revenue market share, even increase it, but not to the extent that it once was experiencing, like the rapid growth. We note that, Dito's revenues did slow down sequentially. Even if they posted a 10% growth, their gross acquisitions, their net additions actually slowed down during this period. So on the revenue side, yes, it will still be a threat. But in terms of the company itself, overall, I would say that it still has a lot of hurdles. Like I've been mentioning in the previous quarter, Dito is still very much in the red. It has a significant retained earnings deficit, has a lot of liabilities in terms of long-term debt, and it has a lot to do with the fact that they would need this investor to come in. And for as long as they still have that overhang of whether or not they're able to continue operations, and they're still at a net loss. So it really is challenging for Dito, but I guess the thing to look out for would really be that investor who can solve all of their liquidity issues.
So do you have any updates on, this potential investor who would come in and infuse capital and allow them to again be more aggressive and grab market share?
As of now, there hasn't been really any updates as to who or when this investor will come. But obviously, we're just keeping an eye on that to see if this threat or this mobile market share that Dito has is sustainable moving forward.
So no updates on Summit?
Yes.
Nothing yet, no?
Yes.
It's been a while. Anyway, let's see. So now let's talk about broadband. So that did better, but if you look industry-wide, growth was only 5%. Who among the big or the three telcos that we talked about performed the best and why?
So for broadband, I would say, generally speaking, they all relatively performed the same on an absolute basis. So if you look at their earnings, their profits, their broadband contributions actually grew for around 400 to 600 million year on year. So on an absolute basis, they're all relatively the same. But then in terms of growth, I would still say Converge would still be leading the pack. Just because of their growth in fiber revenues and it being a pure play without the drag from its legacy business and other sections like fixed wireless, etc. Right? So for the most part, I would say that Converge is still leading the pack. But I would also like to note that on the prepaid fiber side of things, Globe actually already surpassed Converge in terms of its prepaid fiber subscriber base. So
that's quite interesting.
Yeah. So what could be causing this probably would be some of the migrations from fixed wireless to prepaid fiber, and also their constant, their aggressive marketing to offer these lower prepaid services.
Yeah, I think they have an advantage because of GCash.
Yes,
No?
exactly.
They're promoting through that channel, whereas Converge, is more traditional type of promotion, right?
Yeah, Converge usually they would go door to door.
Yeah.
They would try to get these acquisitions through that, and you should explain why their reach is so big, right? So.
Yeah, and maybe again, like you discussed earlier, they have some manpower issues, so maybe they're also lying low on the promotions.
Yes, actually, when we were talking to the Converge management, they did mention that this is also one of the reasons why there was a slowdown, not only in terms of manpower, but also in terms of their marketing. Because as like I mentioned, it's a door-to-door type of thing. And if it's raining and,
they
cannot do their marketing, installations, etc. So this really is, I guess the weather is really a big impact as to how the Converge's operations.
Let's now talk about the financing cost. Both PLDT and Globe show double-digit increase in financing cost. I'm just curious about your thoughts in 2026. Is this still going to be an issue for the telcos, or are the telcos expected to start reducing their debt levels?
So for Globe and Tel, we did note an increase in financing costs. They mentioned that it was due to them refinancing at higher rates. And moving forward, we do expect that the debt levels continue to taper down as their capex spending reduces as well. When we were meeting with them, that was one of the things that they would like to emphasize also, that both of them are now free cash flow positive, and they intend on keeping that all throughout 2026. And looking at Tel specifically, it has various catalysts such as their data center stake sale and their either their REIT listing, also their the sale of their legacy infrastructure or the copper cables, which would help reduce their debt and really get them to that 2 times net debt to EBITDA target.
Yeah. So in other words, they have more stuff to sell to generate extra cash to pay off the debts, no?
Yes, exactly.
Okay. But both of them are focused on reducing debt.
Yes. They did mention also that the KPA actually, it could also help them lower their their capital expenditures, given that they're aligning now with the national infrastructure program, which could help them lower costs, be more efficient with their rollouts, and lessen the need to actually
I see.
spend.
So the debt problem really is more of a PLDT Globe kind of thing. For Converge, it's more of a operating expense, right?
Yes.
Because of the manpower. So general administrative expenses were up by 27%. Is this something that you would be worried about in 2026?
So yes, I would say when we talked to Converge, I guess it was really a hurdle for them, especially during the year. As you know, they did revise revenues downward because of this. Overall growth was hindered in terms of their margins. So going into 2026, it was really one of the big questions, right? But talking to them, they said that they intend on tapering down the third-party contractors, which is one of the reasons why it's driving up costs by training their own manpower and overall increasing or improving the costs that the costs that they incur, right? So in 2026, I would say most likely it will still remain elevated, but improving on a sequential basis.
Maybe the margin level is, going to increase now.
Yes, exactly.
But probably not yet back to where it was before. Okay, and now let's talk about the fintech like GCash and Maya. And I think one of the main stories for the third quarter is that their contributions dropped due to the delinking of gambling sites. Do you think that most of the negative impact has already been felt, or we could see some more negatives?
Okay, so I guess from an initial standpoint, the negative impact is most likely already felt because from gross transactions or the online gaming transactions, they already have recovered, but DigiPlus actually noted that from the lows, it already has recovered 10 to 20%. So I would say for the most part, we already felt the big drop, right? But then moving forward, I would still say that it's still something that they would have to address, given that there are some portions of this delinking that or there are some aspects of this delinking that go more than just the online transactions, such as the advertisements within the applications. So the revenues generated from that would still remain gone. It's not like if the gaming attractions.
So they're not allowed to advertise anymore through the fintech like GCash and Maya.
Yes, they had to remove their advertisements. So it's one of the main revenue drivers that was removed from these digital wallets.
Yeah, and although I think the online gamers can still top up through GCash and Maya, the fact that it's not an automatic link that has had a negative impact.
Yes. So it's just the ease of use also. So before you could go to your Maya or GCash application, click on the advertisement, and you're already, on your way to having a transaction. But now that whole process has to go directly to the site.
Now let's talk about the Konektadong Pinoy Act for telcos. How is it going to affect the profitability in 2026?
so following the release of their IRR, it's actually just a draft. There's still a lot of missing information or key pieces that would allow us to accurately forecast, and get a really good grasp as to what will happen when these new entrants come in. Is it good? Is it bad? Is it favorable? But generally speaking, there seems to be a lot of autonomy, or there's more autonomy than we thought with regards to the agreements that they have with each new entrant. But then the telcos, they noted that it's really hard to say as of now. I mean,
A lot of uncertainty.
a lot of uncertainty. But what I could say though is that Globe and Converge, they seem to take the news or the IRR with a positive spin, while Tel is more or less looking for more information, or maybe even more clarity in terms of like security processes, the qualifications. Because in the Konektadong Pinoy draft, they didn't mention who the new entrants are, or the access list, the participant requirements, the allowable rate of return. So all of these, or just even the spectrum management framework, which would determine how much they'd have to lease. All of these things are all yet to be determined and actually seen once a new entrant comes in.
But in general, they seem to be more, I guess, more positive, right?
Yes. They think that it's also a good opportunity to increase their port utilization, especially Converge, given that relatively
excess capacity.
They have the excess capacity to accommodate all of them.
And I remember, like, in some meetings with them, they kind of talked about most likely the new entrants will be in the broadband space rather than in the mobile phone space.
I feel like it really just stems from the matured nature of the mobile industry. The mobile industry doesn't seem to have a lot of room for more players, and it seems like it has reached more or less the whole nation. So the growth from mobile will most likely come from the offering of 5G services. Unlike broadband, wherein you could have higher speeds, prepaid fiber even. More, I would say there's more room for growth really in the broadband. Yeah.
I see. Okay. So looking ahead, what catalyst could drive a revenue or earnings rebound in 2026? ARPUs, prepaid fiber, digital wallets, lower capex, lower interest rates. Like, what would be the drivers?
So for the mobile side of things, it's really about the stabilizing ARPUs. I did mention that ARPUs declined on a year-on-year basis, but sequentially, it seems like it has been stabilizing more or less. During the period, I think it remained flat actually, around 0.3 or 6% up. Declined. So I would say we're kind of reaching that point wherein the consumers are able to avail of these services at these prices. So the stabilizing ARPU, and along with this, we do expect better weather during the quarter. When we were talking to them, that was one of the catalysts that they see, that there would be more consumer activity, like walking out, going to malls, celebrating holidays, etc. All of these things help the mobile data usage, and increase and along with this, the lower base from their ARPUs. That should be one of the catalysts moving forward. And then on the broadband side of things, I think it's really revolving around the prepaid fiber space. Whether I wouldn't say it would be the driver, because obviously the driver would still remain to be the postpaid fiber, because this has the highest ARPU out of all of them. But what's interesting about the prepaid fiber is it keeps their customers within their ecosystem. So you won't be seeing as high of a churn in previous quarters, because, for example, if they feel like the postpaid fiber prices or offerings are a bit too high, Globe or Tel or any of these players could provide them with prepaid fiber offerings, which could lower their churn. Yes, and keep them within their ecosystem. So also hopefully the lower interest rates as well could provide not only just a boost in spending, but also more favorable terms for their refinancing, like I mentioned. So these are some of the catalysts looking ahead.
And yeah, I guess, speaking of low interest rates as well, lower debt levels, I think the capex also, it's like downtrending or that is the expectation for 2026. They have to spend less on capital expenditures.
Yeah. So yeah, when we were also talking to them, the general notion would be that, the lower capital intensity, which could help also add to the sustainability of their dividends, right?
And they maybe can pay down their debts in 2026. I think everybody said that, not just Globe, PLDT, even Converge, right?
Yes. Because for Converge, I think they just have a few back-ended, delays in terms of capex, which is why on an absolute basis, I guess, it's higher. But then if you look at it normalized without those, generally the trend is lower. Yeah. So even all three. Yeah.
Yeah, they will benefit from lower interest rates plus lower capex requirements. I see. And digital wallet transactions, potentially, it could benefit or maybe not yet?
For digital wallet transactions, I would still say that there's a bit of caution, I guess, because we are coming from a relatively high base in terms of first quarter, second quarter, right? Before all of this online gambling delinking has happened. So we're still a bit cautious. Despite us mentioning that there has been a recovery in terms of the online gaming transactions, it's still on the ad revenues and other products or services who will pick up the slack that was lost from the advertisements, right?
Yeah. So in other words, we don't know if the other businesses or the other revenue lines will grow fast enough to overcome the lost revenues from online gaming.
Yes. It was a really, I would say it's one of the big drivers of the digital wallets this year.
Yeah, I see. Okay, so of the three telcos, who do you think is the best positioned for a rebound? And who's the most, I guess, challenged? Or maybe let's just talk about who are your top picks.
Okay, so my top pick, or who I think is positioned the best to have a rebound, would probably be Tel, for the main fact that it did post although there were weak revenues, higher financing costs, I would think it has generally been able to see more stable earnings in terms of their broadband contribution, even their mobile. I would say also in terms of their enterprise business, they have some catalysts there, as they have one of the largest actually data center here in the Philippines. As that gets filled up, and as they recover from the loss of the POGOs from their facilities, I would say Tel is one of the main beneficiaries of this. I would also put this as my top pick because at current prices, it already offers significant yield in terms of dividends, right?
What's the dividend yield?
The dividend yield is around 7.6% for 2026.
Oh, quite attractive.
So it's already really attractive, and as we mentioned, lowering of debt, lowering of capex, these are all supporting the dividend policy that they have. And then after that, we also have the data center stake sale. We also have as I mentioned, the sale of their copper assets. All of these things point to
potential upsides,
yes, and catalysts for the prices of that. And they're also trading below. Tel is also trading below its historical EV EBITDA of 5.7 times. I think now it's at 5 times, given that it also saw a bit of a rally from the lows, from the initial shock of Tokentanado Pinoy Bill. But I'd also like to mention, in terms of top picks, I guess, probably be Converge. For Converge, I do see some recovery in terms of their broadband. Although fourth quarter, I would also be a bit cautious because it's not known to be their strongest quarter. But moving forward, I guess, as they start recognizing the enterprise businesses that was delayed, because initially for this year, but was delayed to 2026, I think there's room for surprise, or I guess outperformance. For Converge, at least, also, as I mentioned, the situation on their manpower is also expected to improve as the weather also continues to be in their favor, right? So against my FV also, there's also a significant upside, so it would really be hard to ignore at current prices. They do also offer dividend, but obviously not as high
Not
as
as much, yeah.
Tel and Glow. I think at current prices, it's around roughly 3.5 to 4%. So yeah.
Okay. Okay, so with that, thank you very much for your thoughts on the telco sector, and hopefully 2026 will be a better year for all three telcos.
Hopefully.
Yeah. Thank you very much.
Thank you so much.
Thank you everyone for joining us today, and I hope this discussion helped you better understand the challenges and potential opportunities facing the telco sector as we head into 2026. If you enjoyed this interview and want more expert insights on market trends and sector outlooks, don't forget to like, subscribe, and hit the notification bell so you don't miss our next episode. This is April Tan, and as always, remember to stay sharp, stay selective, and as always, invest intelligently.